Hey traders, Raghee here. Happy Tuesday, everybody. Welcome to Charts and Coffee for June 8th. Great to see everybody. All right, so as always, let's just jump on into our questions. And I do want to remind everybody, if you are practicing the 642 window into earnings, we are looking at about 5 weeks out before we start the earnings game all over again, kicking it off with the heavily weighted stocks within the XLF. And so just remember that if we can find those double green markets 6 to 4 weeks out, that's sort of the sweet spot to start looking at what your watch list will ultimately be for earnings. And I love to use Estimize. Maybe we'll jump into that in an episode of Charts and Coffee. I'll definitely be jumping into that in the chat rooms in the coming days. And so just keep an eye on that as we are re-entering that wonderful, playing the trends into earnings game, which I love to do. Again, 642. And if you don't know what 642 is, check out Countdown Trader, because we have a great write-up on it. You can just head on over to the website, countdowntrader.com, and just find the 642. There's, I think, 2 or 3 articles that we have on that topic. Okay, so let's go ahead and take some questions. Good morning. Good morning. Good to see everybody. TLT breakout. So John, yeah, great question. So 2 things to mention with TLT. And really what I'll do is let's start with ZB, because that's the futures contract that TLT keys off of. And where's my handy dandy drawing tool? There we go. So what we want to remember is this whole thing started with a really nice reversal, 1, 2, 3, right here, 1 swing high, retracement, and your breakout was right through here. So here's your swing high. There's your breakout. Now, I like to see the market break the wave as well. So I like to see a combination of, well, it's a very simple pattern. This is straight up a Dow 1, 2, 3 pattern. So here's your downtrend. You can confirm that really easily with the double red of the JT multi-trend. So that's in place. It's got to be a trend reversal. So how do we know if it's a trend reversal or not? We look at the fact that the wave is moving lower. That's the precursor, right? Look, a lot of patterns out there are amazing patterns, but if they're traded within the incorrect or a less effective context, you're going to have less than ideal results. So keep in mind that in this case, the wave was heading lower, 1, 2, 3. There's our break. And then what's happened is nothing has happened. So what we've been focusing on is mostly if we can trade down near the lower end of the sideways range that has developed, that's a better shot at the long follow through. So we don't have to break out of the range, right? Now, what's been more interesting is as the ZB, and then, coordinating with the TLT, was flattening the real yield. This is not the same thing as yield curve. It's flattening the real yield. As soon as we saw the flattening of the real yield, and corresponding with that was the 1, 2, 3 in, as you can see here, there's the swing high break right in there, and then the wave break right in there. As soon as the real yield flattened out, boom, there went gold. So this was something we were discussing in the futures room back in March, because this pattern takes a little while to form when you're talking about daily time frames. So now that we understand the trajectory of bonds and sort of the knock-on effect, let's go to another knock-on effect. And for that, we'll jump on over to the TNX on TradingView. So what's the deal with the TNX on TradingView? It too is flattened out. So once you understand yield curves and real yield, 2 separate things, and you understand that if the yields are flattened out, what's going to benefit? Well, I already showed you one knock-on effect with gold. The other one is, tech is going to benefit from just the flattening out. So I don't actually need the yield to drop, just like gold did not need the bond market to break out. It just needed real yields, which, by the way, what is a real yield? This is how macro works, gang. A lot of folks talk about macro, but it's unactionable because the connective threads aren't always as clear. Real yield is the nominal yield of a bond minus the rate of inflation. You don't have to track that. There are sites that do that for you, including treasury.gov. Yes, .gov tracks that real yield. So all we need is it to flatten out. And so you'll notice that I don't need TNX to drop. In other words, we don't need the yield of the 10-year to drop in order to get the breakout in gold or in tech, although that would be phenomenal, right? If that were to happen, that would supercharge the long position that we have in gold, the long position that we have in miners, a long position that we have in silver, but it's not necessary. So yes, it's good for tech, but that's not the only place it's good for. So think about those knock-on effects, and then just opens your pipeline full of opportunity. So I hope that makes sense, and then starts to give your watch list a little bit more clarity and more opportunity. I mean, that's really what it's all about, keeping your pipeline full of opportunity. And I see a couple questions about bonds. So, ask yourself this. If you're not familiar with the 1, 2, 3, familiarize yourself with this pattern. Good old-fashioned Charles Dow pattern. If you're not familiar with when the swing high breaks and how the wave break factors in, again, familiarize yourself with that trigger. And then also realize that this never went double green. But remember, we don't need this to go double green in order to see the movement higher in the Qs and in the gold market. And then gold is going to usually kind of kickstart silver. And this is what you've got. So this candle here, it's really not a helpful candle, believe it or not. I get why it's on the radar, but this candle here is not that helpful. Neither is this. The candles that are helpful are the ones that nobody's talking about. These string of candles right in here, moving down lower in the range. That's where we bought our TLT. That's where the calls are, the way I view it, is momentarily mispriced. That's where the people writing premium take their eye off the calls and put their eyes on the puts, because most people are momentum players buying puts or ditching their calls in that bearish momentum. We want to capitalize on that, oversight, if you will. So I know I kind of spent a few minutes here, but it's a really important topic. And I hope that explanation helps a ton, because it's been a great trade. It's been a really good trade. So the questions on gold relate back to this ZB TLT. The questions on GLD will also, track back to this conversation. So thanks for the questions. Now, sticking with metals for a moment, one of the best metals to have been in since late last year has not been gold, has not been silver, it's been copper. And it's shocking how little discussion there is of this really nice move, which is still intact. It's a reflation trade in copper. Now, as copper's moved higher, and I saw some questions on Freeport-McMoRan. Yeah, I want to get in. We've been in and out, rolling higher with the trend in Freeport-McMoRan for a while. So do I want to look at Freeport-McMoRan again? It's on the radar. Now, we're already long once. Here, let me zoom in just a little bit. So we're already long Freeport-McMoRan from slightly lower already. But yeah, it would make plenty of sense to look long again, because this is really a proxy for copper. It's really a proxy for copper. It's a stock alternative for copper. For those of you that don't want to play copper, there's no ETF for copper. Even the options for copper are not, I don't think they're traded on Tasty or Thinkorswim, which is fine. You can play calls in Freeport-McMoRan, which is something we've been doing. So absolutely. And that's tied up to that metals conversation. Not sensitive to real yields. It's more sensitive to the reflation trade. The reflation trade is what's propelling some of these metals higher. So good eye on that copper play. All right. So next up is, let's see here. So we got the TLT questions, the gold questions, copper, and yeah. So I do want to mention something about tech, since we already discussed that. Tech is moving higher. It's definitely getting, the benefit of the 10-year yield dropping. And again, yields dropping is going to help tech. However, please don't take your eye off the fact that tech is still in chop, and that it's actually the Dow and the S&P and financials and transports and industrials and even healthcare. Some folks ask me, what the heck happened with healthcare? We got long in healthcare through here. Had to take a little bit of a ride because the ACA is going through the high court again. But I faded the previous 6 or 7 times this has happened. And we are looking for movement higher. But even healthcare looks better than the Qs look. The best part of tech right now, and it has been for months, is communications, is XLC, which tracks right back to Google, which tracks right back to Facebook. So be very discerning about how you're looking at the broader markets right now, because as I've been reminding everybody, whether it's in the chat room or here in Charts and Coffee or in the free videos, the premium videos, there are corners of the market that look as good as 2020 did. In other words, 2020 was great because it was the buy everything market. Everything was moving up. That's not really, real. That's not a real year to year in type of environment you're going to see throughout your career. Having gone through nearly 35 years, I'll tell you the 2020s of the world are the anomalies. 2021 is more normal. 2021 is what your career, your trading seasons are going to look like. But there are always pockets. What's that line? And this is probably the only thing that I love from the show. I don't watch it, but there's a line that I love in what's called the Jim Cramer show, Mad Money. He says, there's a bull market out there somewhere and I'm going to help you find it. That's actually the best thing that he says every show, because it just reminds you that you have to be discerning about market structure and you have to be discerning about macroeconomic trends, technical trends. And then you start to look at index sector stock in a top-down view of, where is the clarity? What markets are favored right now? So I love that mindset. And there are pockets of 2020 in 2021, right? There are parts of that. You just have to be more discerning. And this is where 2021 is what teaches you that your watch list building, as I like to remind everybody, what you trade is actually more important than how you trade it. Now, the reason for that is last year, dip buyers like myself, swing traders, did fine. Momentum breakout traders did fine, because the most ideal type of market for the widest group of market participants is an uptrend. Whether you like to dip buy, whether you like to momentum break, whatever it is, chances are the strategy that you use, not everybody, of course, there are differences, but for the widest group of market participants, the double green uptrend is going to be where you find most of your success. Prioritize the structure, prioritize those structures in your watch list, and all of a sudden you'll find that your trading is doing much, much better. Your strategies are going to work far, far better. It's the old idea of the right club for the lie of the ball. My golfers out there, or my baseball fans like myself, waiting for the right pitch, right? We don't swing at everything. So, and I think last year's sort of messed with our mind is you got to swing at everything and almost connected with everything too. All right. So next up is Dale says you're looking for the Charts and Bloody Mary channel. Oh gosh. Yeah, Dale. Yeah, we're only doing the coffee this morning. That might be around 8 p.m. or Sunday mornings, maybe. That's the Sunday morning brunch Charts and Bloody Mary episode. How you doing, Dale? All right, can we take a look at UNH? Gladly. So UNH is a piece of two. So this is where top down is going to be important. Again, I mentioned we're long XLV. We're also long Pfizer. Now, UNH is also heavily weighted within the Dow. So as tech has been grabbing a lot of attention, remember, we call it sector rotation, right, in the broader market lingo. But the truth of the matter is sector rotation is just where do we see something as being overbought or no longer really a good deal. In other words, we feel like we're engaging in an extended market, and where are the bargains? So sector rotation sort of, I use a Ferris wheel analogy, right? Who's ever at the top of the Ferris wheel getting the great view, well, what's going to happen? Eventually, it's going to rotate down to the bottom, and the folks at the bottom are going to get the great view. So sector rotation is a lot like a Ferris wheel. it doesn't move from really great trends to sort of great trends. It tends to be much more dramatic. Well, attention is the same way. So if attention is going to the Qs, going to the NASDAQ, then it probably means it's moving away from something else. And I've noticed that in some pockets of the reflation trade and some pockets of certain sectors that have done really well, like IYT and XLI, we've seen a little bit of lethargy. So what we want to remember is I don't want to chase things as they're moving to higher highs. I want to go find where inevitably that Ferris wheel is going to spin around again. So having said that, with UNH, remember, it's part of a Ferris wheel ride that goes beyond XLV. So if you're looking at healthcare, you might be better off looking at XLV, or you might be better off looking at names that are not heavily weighted within other indices like UNH is. Remember, UNH is heavily weighted within the Dow. So even though healthcare might be a terrific narrative post the ACA decision from the High Court, we want to remember that it's still going to be subjected to any loss of attention and flow in that rotation from the Dow. So I like it. I like where it leads me, which is into the healthcare, but it may not be something specifically that I want to trade. But overall, do I like UNH? I mean, yes. I mean, I think healthcare is on our side. I think the Dow overall is on our side. We're right at a conservative level entry, right around 400 to 399.80. But if you're looking at UNH going, what the heck happened? Why is this getting hit harder? Again, it's think about your individual stock's place. Sometimes it's places within the overall passive investing, this ETF influence that's only going to get more and more impactful. So that's sort of the secret of sector secrets. It's not a secret at all. It's, understanding an individual stock place within index sector stock and the influence that, again, these ETFs are going to have on these high concentration weighted ETFs are going to have on individual stocks. All right. So I hope that helps. I am, yes, I'm largely bullish today. Look, the Monday after non-farm payroll, a lot of folks ask me what happened. Remember, the Monday after non-farm payroll is oftentimes very wishy-washy. Those of you that saw, I've been building my watch list. There's a lot of things that I like, but I didn't pull the trigger on any of it because Mondays after non-farm payroll Friday, like yesterday, are very sort of wishy-washy. So that was pretty much par for the course. I'm not sure that this is a turnaround Tuesday, but remember the week after non-farm is usually pretty low on high impact data releases. I am bullish this market. We're above all the key markers. Before I start day trading, I look at about 6 things on the daily. One of the most basic to understand is looking simply at where are we in relation to the anchored volume weighted average price. If that's kind of new lingo to you, what is the VWAP and where would you anchor it? Why do you use it? Next Wednesday at 8, I've got a webinar on the day trading that I've been doing in 2021. So pencil that in. That's the 16th. And we'll talk about that then. And a lot of other things like clearing range, V-score, Darvis, and some of the updates that we've made to those tools. With that being said, I'm going to take about a 30-second break. I don't have my coffee. I know that's kind of crazy for charts and coffee. Left it in the other room. I'm going to go grab my coffee. And then immediately after, we're going to head on over to the futures room and the options room for the first hour of the day. I will be in both the rooms. So I will see you there momentarily. Everybody else, please do check out our masteries and our different rooms here at Simpler. Look forward to seeing you in one of them. Find something that resonates with the way that you want to tackle this market. Be good to each other. I'll see you tomorrow.